Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Giga Metals. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Mark Jarvis, Chief Executive Officer of Giga Metals, which trades on the OTCQX Best Market under the symbol GIGGF and on TSXV under the symbol GIGA. Welcome, Mark.
Well, thank you very much. And that's actually Giga Metals, as in a Giga factory. I'm very glad you're all here today. Some of you may already know the story to some degree, and I'm going to go very quickly through what we've already got. Basically a summary of our pre-feasibility study published last year. But then I'm going to get into a new part of the story, which is some of the exploration potential that we're looking at. And I always like to start with this slide. It shows the terrain. Terrain is important in the mining business. This is excellent terrain for open pit mining, easy terrain for road building and all that sort of thing. You can see that, there it is. Standard disclaimer. So we have a partner, a Mitsubishi Corp. They own 15% of our joint venture company, which is called Hard Creek Nickel. And we own 85%. Now, just for clarity, this is not the car company Mitsubishi. This is, although that's an associated company, it's sort of a wider association, shall we say. It's not like two divisions of the same company. But this is the Mitsubishi Corp that is the largest commodities trader in Japan. And within Mitsubishi Corp, there is the raw materials division. The raw materials division likes to get involved in mines at the development stage. And they help to get the mine built. They help to put together the partnerships, and that's what they're doing with us. They put in money, but they're also putting in a great deal of time and effort. They're an active partner, shall we say. And so we did complete a pre-feasibility study in October of 2023, and we're planning the next steps now. We're also talking to other potential partners right now. So some of the highlights for what we've already got, it's a 30-year mine life, producing in a typical year 35,000 tons of nickel and 2,000 tons of cobalt. All of this contained in a very nice, high-grade, very clean concentrate. Capital cost, $1.9 billion. And then the all-in cost to produce metal, $4.65 a pound. That's including transportation and processing fees at the smelter. We modeled selling this to a smelter because that is a market that exists right now. We think that market is changing and will change, but it's not really a robust market yet in terms of refineries that would provide a more efficient route to the battery cathode. Some technical highlights, simple flow sheet. This is probably the simplest flow sheet I have ever seen. Simplicity is good. Simplicity is low risk. It's a very large open pit mine with a very low strip ratio. This is unusual, an unusually low strip ratio, 0.4 tons of waste per ton of ore that's put through the mill. That saves costs. Very successful geometallurgical program. This PFS de-risked this project considerably because we are able to predict with very narrow error bars how much recovery we will get from each and every part of this deposit. So that's a significant de-risking. Our tailings sequester CO2 from the atmosphere, and it's measurable, it's significant. it provides a potential path to a zero carbon mine. Here we are in north central British Columbia. We've got access to a deepwater Pacific port. We've got access to North American rail. We're in the jointly claimed traditional territory of the Tahltan and the Cascadena. And both First Nations are generally welcoming to the mining business, provided it's done responsibly and with respect. Here's the mineral reserves statement from our PFS, 950 million tons. That is probably 2/3 of our measured and indicated resources, and we've got another billion tons of inferred resources beyond that, and the deposit is open. So this is truly a giant. And this is our projected annual production. Green is nickel, so we get up to almost 45,000 tons some years. The blue line is cobalt, and it goes steadily right around 2,000 tons a year and higher. Again, a simple flow sheet. I'm not going to belabor the point. The concentrate's beautiful. This is very low in deleterious elements. It's a premium product. Any smelter, well, frankly, they'll pay extra for something of this quality. The average grade of nickel concentrates is anywhere between sort of 4 and 8% nickel, and we're coming in at 18%, steadily, plus or minus very little. So this is ideal for a smelter, but it's also ideal as the pressure oxidation refinery market grows to supply the battery supply chain. This is an ideal feedstock for that method of processing, which is a more efficient method to get the nickel to the cathode for the battery supply chain. So that's what we've got. And when we produced that report, a little more than a year ago, the price of nickel, which was around $12 a pound, promptly collapsed. And we've been in a bad market for nickel for about the last year, which has hurt, frankly. We are pretty sure that the price of nickel has bottomed because more than 40% of producers are losing money. And even beyond that, the ones that aren't actually losing money are barely breaking even, some of them. And some of them are making money, but only the very, very lowest cost producers are making any money. And so that is typically the bottom. You can bobble up and down by 5%, but, for the short term. But we think the bottom is in place, and it's just a question of timing when nickel gets out of here. So, I decided that rather than sit around and wait for the price of nickel to move, that we would revisit some of our exploration potential. We've got this giant ultramafic system. We've properly explored maybe 20% of it, but it's all mineralized. We've got mineralized drill holes all over the place here. And we've got geochem, we've got geophysical surveys. So I reached out to a gentleman named Dr. Stephen Beresford. He's one of the leading nickel exploration geologists on the planet. Both an academic, but also an extremely experienced practical exploration geologist. He's had big jobs at big companies, big jobs at smaller companies, and I like the way he thinks. He really is fresh eyes. So I contacted him and asked him if he was available. And he said, I've always been intrigued by the Turnagain ultramafic complex. And that was the start of the discussion. So just a very, very interesting guy. And he has gone through all of our data with our geologists and has come up with a number of exploration targets. Here's the idea. We've got this huge, low-grade, open-pittable system. If you could ever find something smaller but high-grade within this mineralized system, well, you would have a mine that didn't care what the nickel price was. You could be profitable at any price, providing the grade is there. And so, that's always been the case. And really huge economic value mines can be physically quite small. And so in a system the size of ours, it can be hard to find. How do you pinpoint that? How do you figure out where to point the drill? And that's what Dr. Beresford's about. So, and this is just some of his CV. Again, he's had some pretty important jobs, but his specialty has always been, nickel, copper, PGE deposits all over the world. And according to him, we've got a few things that we're prospective for. For one thing, within the cloud of low grade, he says he would be surprised if we don't have breccia pipes. And he's pinpointed one that he thinks looks possible. We are currently reprocessing our mag data using modern algorithms, and the computing power has just gone ahead, of course, by leaps and bounds. So we're getting that reprocessed. We should have something in a week or so that we can start analyzing. But that's where that should show up where the breccia pipes might be. And those things could be semi-massive, meaning they could have a lot higher grades than our average grade. And they might not be that big. They might only be 50 meters across and vertical. But if we could find something like that, that would have a huge impact to increase our economics, again, so that it wouldn't matter what the price of nickel is so much, as that we would be profitable at almost any price. The other very interesting target is what he calls a Volkovsky-style massive copper magnetite deposit. He thinks that there's a possibility of that below what we call the Attic zone or the DB zone. And Volkovsky is a very profitable copper mine in Russia. And there's also potential for massive sulfides, sort of like Voisey's Bay or like the Sudbury Basin, where you get really, really high grade kind of veins or sheets, and suitable for a high grade underground mine. He thinks there's areas where that is potential. So this is just a little bit of information about the Volkovsky style mineralization. I'm not going to get into it because I'm not a geologist, but just the final point is what's important. It's the same setting as the Turnagain, is in his opinion. And so he thinks we've got a real shot at this kind of target. So, one thing interesting about that is if we were to discover something like that, it's copper, not nickel. So we've got that different optionality of the different metals. So that could be quite interesting, and again, extremely exciting if we were able to find something like that. He commented we'd done a lot of geochemical work on surface. He thought the work was excellent, and it gave him a lot of clues that he needed to start developing some of his ideas. And this is where he thinks that the potential Volkovsky targets would be. They'd be below 200, 250 meters. So, they have to be high grade. It would be underground mines, not open pit. But nonetheless, if you could find something like that, it would be incredible news. And then again, the pipe-like semi-massive breccias, which are very similar to Agua Blanca or the giant Mascot mine in BC. Agua Blanca is in Spain. And then there's also potential massive sulfide target that he's identified. That shows where he thinks there could be a breccia pipe hiding. That's a mag survey, and you can see in mag the whole ultramafic system from stem to stern. That's about 8 kilometers, about 5 miles long, 2.5 miles wide, sort of thing. It's very, very large. And down in this area is where we've drilled off our reserves. So most of this is open to exploration, and we're gonna take a swing at it. This shows it's a side view of the giant Mascot mine in BC, and this shows the way the Brewster pipes are arranged within it. Those Brewster pipes at the giant Mascot mine are a key part of the economics. They're higher grade than the surrounding lower grade rock, but it just gives you a really nice lift to the economics. And these are some of the targets. Now, that thing on the lower left here, it says valid target. I have always wondered what that is. And he says, you have to test that. You have to test that. So we're planning to test it. This is our board. We've got an excellent board. Lyle Davis is chairman of the board. He's very good at that job. He used to work for the old Vancouver Stock Exchange as a regulator, chasing bad guys. So he keeps us, he understands corporate governance extremely well. He's very good at the job of chairman. Martin Vidra, our president, had a 35-year career at Sherritt, which is a Canadian nickel and cobalt producer. They've got a mine in Cuba. And so you may not have had an opportunity as Americans to look at Sherritt. None of the executives ever visit the United States. But Martin had a very long career as an engineer, but towards the end of his career, he was in marketing, and he sold, Sherritt had a strong technology division at one time. He sold Sherritt technology to mines worldwide. He also sold nickel and cobalt products to end users, so he knows all of the end users very well. There's myself, and then there's Bob Morris, who had a very distinguished career at Vale, most recently. Vale is the giant iron ore producer out of Brazil. It's also one of the largest base metal producers in the world. That's a small part of its business, but Bob was in charge of worldwide sales for base metals for Vale, which included copper, nickel, cobalt, and also precious metals. And so he knows all of the end users as well and understands very well how the market works. So that's our board. And I think I've gone through this rather quickly. I think I will now open this up for questions. So I've got a question here. How do you plan to action Dr. Beresford's analysis? Well, we've started. His first recommendation, costs about $10,000. Reprocess your magnetic data. That's a big first step, but it doesn't cost a lot of money. So we should have that soon. That data will show us a lot more detail than we currently have on the structure and the geometry of this deposit, which is very important. It will also give us important information in designing a gravity survey. And this is something that I've had a number of people 15 years ago, it was not normal or not usual to do gravity surveys, but apparently the technology has come a long ways. And also, of course, like everything else, the computing power has come a long ways. So we're going to design a gravity survey, and then we're planning to do ground-based EM surveys that are deep penetrating, and combine that with the mag and the gravity. That can help us define our targets so much better, while at the same time vastly reducing the false positives. So that's the action we're going to take. And ultimately, we're planning to drill. So that's, those are the steps that we have to go through. We've got a question here. Can you speak to Mitsubishi Corp's commitment to the project, and are they providing any capital to support your 2025 plans? First of all, they are committed to the project. They have emphasized that several times to me. They are risk averse, and before they wade in deeper, they would like to see a mining company involved. And so And by mining company, they don't mean a junior like us. They mean a larger producer that they feel confident is capable of building and running mines. So that's our mission. They're being extremely helpful. We're getting introductions to mining companies that they would like to work with at the very highest levels. We've got a number of conversations going on, and some of them are exploration minded as well as development minded. Um, you know, Large mining companies, most of them, they'll have exploration departments, but frankly, they're not that good at it. Juniors are generally better at exploration than major mining companies, but some of them are actually pretty good and are interested in exploration. So we're talking to some of those as well. I've got a question. What were the causes behind the collapse of nickel prices? And what are the catalysts for a move off the bottom? The cause was pretty straightforward. The Chinese overbuilt in Indonesia. Everybody rushed into the same space at the same time using cheap, government sanctioned capital. Um, and, the interesting thing is demand continued to grow strongly through this entire time. Demand just kept growing by leaps and bounds, but supply grew faster than demand. And so they overbuilt too much nickel, price went down. 40% of producers are losing money at current prices, or even more now. And that includes in Indonesia. Like a lot of this production, people have this idea Indonesian production is cheap. It's not that cheap. Some of it is, but most of it isn't. And so, you know, uh, they're suffering too. And what's going to make it move off the bottom? You're already starting to see signs of it. There's an excellent report out by UBS Bank. Um, they put boots on the ground in all of the nickel jurisdictions, including Indonesia, and they really did a deep dive. In Indonesia, the grades are dropping rapidly. It's like any mining camp, you take the easy stuff first. You go after the big bucks as quick as you can, the best grades, the best positioning, the lowest transportation costs. You go for that first. And then as you keep mining, what you're mining is lower and lower grade and less convenient, more and more high cost. So those grades are dropping rapidly. They're actually importing a lot of ore from the Philippines to Indonesia now. And the ore in the Philippines is dropping in grade even more rapidly, according to UBS, than in Indonesia. So you're already starting to see that phenomenon. We think you'll start to see some tightening up sometime next year. It's hard to be precise. Timing is always tough to call. But the fact is that the grades just keep, or pardon me, the demand just keeps rocketing along. There's a perception that the EV market has fallen off a cliff. It's not so. It's growing less rapidly than it did. You can't continue with 50% compound annual growth rate forever. That's for sure. It's mathematically impossible. But the EV market hasn't collapsed. What happened is a bunch of the legacy automakers rushed into the EV market all at the same time. They made far too many EVs, and they made them way too expensive, and then they're having trouble selling them, and so they've been bruised. And there's a bad psychology out there, but nonetheless, people are still buying EVs, and that market is continuing to grow. So, and then specifically for nickel, here's something interesting that I noticed about a month ago. There was an article about LG, which is the giant South Korean conglomerate, and they're in the battery business amongst many other businesses. They published a paper in one of the Nature magazines about a new technology that they've developed for high energy density batteries. It's a membrane that emits electrons. It's a nanometer thick. It's between the cathode and the collector. It's a nanometer thick, and it lets the electrons go back and forth until the temperature goes up. And when the temperature goes up, to a certain range, to the critical range, it stops letting the electrons through. And so this solves the problem of thermal runaway, and it just looks really good. The testing on it has been phenomenal. It's like they did a test where they did a bunch of batteries without membranes, where they dropped 20-kilogram weights on them, and they all burst into flames. With the ones that have been treated, 70% of them did not burst into flames, and 30% of them did, but the flames extinguished quickly. So, once you can solve that, now you can really cram the nickel into the cathode, because energy density, which is what you need for your EV range, energy density also implies instability. And so if you can solve that instability and not have thermal runaway, not having your car burst into flames, that's a good thing. So it opens the door for really high nickel batteries, and for 1,000-mile ranges. It's quite a phenomenal thing. And so it's going to rekindle, I think, the nickel market. Quiet little story that flew under the radar. Are there any other mining companies operating around Turnagain? Not in the immediate vicinity. I mean, there's one deposit under development, but the closest mines are probably 100 kilometers away. It is an area in general. That part of BC is a very rich mineral endowment. What are our key initiatives for 2025? Well, I am hoping to get a partner that is interested in exploration. We're doing some of the early work, which is ourselves, which is not that expensive, but to really go at it, we're going to need more money. And so I'm talking to a number of people about that. Stay tuned. I'm hoping in the first quarter of next year to be able to announce something, but we'll see. It doesn't happen until it happens. So what geopolitical factors could affect the development of the Turnagain project? It's hard to say. That's really hard to say. People put it another way. They say, what's the Trump presidency going to do to us? Well, I don't think it's going to matter much, actually. He's talking about 25% tariffs on, Canadian imports to the U.S. Well, I don't see him putting 25% tariffs on oil, for example. I can't see 25% tariffs being put on Canadian nickel. If you're going to build EVs and gigafactories in the United States, and you don't want to rely on Chinese nickel, you're going to want nickel from friendly jurisdictions, from allies like Canada and Australia, for example. So, I just don't think it's going to make much difference at all, other than, a geopolitical thing would be, like nuclear war. Well, okay, all bets are off. But, beyond something that severe, I just don't see much difference. Anyways, I think we're pretty much out of time. I want to thank you all for attending. If you've got any more questions, and you always think of your best questions after these events are over, send us an email. We'd be happy to answer any questions you might have. If you are interested in a one-on-one meeting, let us know, and we'd be happy to talk to you. Thank you very much for your time, and we'll see you next time.